Shri Gurubhyo Namaha children. In the last class, I explained to you what is oversubscription, and we did a problem related to that. And the first method I already taught you, and now in this class, I'm going to teach you about pro rata allotment. Okay. Now, what do you mean by pro rata? Now, when shares are issued and when you get more subscription, when the application money received is more than the share offered, it is called as oversubscription. So the first method we saw that when some of the shares, the first method, whatever shares, some of the shares that they are applied for is issued in full, and some of the shares are returned or refunded. Okay. Now when it comes to pro rata allotment, what do they do? Now imagine you have the company is going to issue 30,000 shares. Okay. And you have got around 50,000 shares. Issue is only 30,000, but you have got application for 50,000 shares. So you got 20,000 in excess. Right? So 20,000 in excess. Now this 20,000 you're going to adjust in allotment. So when your allotment amount is due, this much amount you're going to adjust in allotment. Or sometimes there will be a refund. For example, if there is a refund of 5,000 rupees, then balance is only 15,000. That much amount is going to adjust in allotment. Now imagine some of the applicants they have applied for 10,000 shares. If it is going to be pro rata allotment, okay, the company has got excess. Okay, now they got 50,000 instead of 30,000. 30,000 is actual issue, but they got 50,000. Okay. Now they have to issue on pro rata means those who got 10,000 will be issuing 8,000 shares. Okay, those who have applied for 5,000 shares will be given 4,000 shares. And those who have applied for 3,000 shares, nil. Their amount is going to be refunded. They're going to be refunded. Okay, now this is called as pro rata allotment. Now I'm going to teach you. I'm going to teach you illustration number 4. Khan Limited issued 50,000 equity shares of 10 each to the public, payable 4 on application, 4 on allotment, and 2 on first and final call. And applications were received for 65,000 shares. The directors they decided to allot 50,000 shares on pro rata basis, and surplus money was utilized for allotment. Past journal entries assuming that the amount due was received or were received. So now that the company is going to issue 50,000 shares, okay, and you have received 65,000, okay, your demand is 65,000. So what is the excess? 15,000 is your excess. And what have they decided? They decided to go for pro rata allotment. That means they're not going to return anything. Whoever is applied for, they're going to give you, all right, 15,000 is excess. And what are they going to do? 15,000 share is going to be adjusted in allotment. Instead of returning, it's going to be adjusted in allotment. So the face value of the share is 10 rupees. So in that 4 on application, 4 on allotment, and 2 on first and final call. So total 10 rupees they receive. So let me see how we are going to adjust it. Okay. So let me see what is the first journal entry. Let me increase your okay. All right. Now the first journal entry, bank account data, to equity share application account. Okay, the application share application money received. I'm writing the short form. You can write it in full. Okay, so how much you're getting it? 65,000 into 4. So what's the total amount you're going to get? 65 into 4, 2,60,000. So 2,60,000. Right. So how much is going to be transferred actually? Equity share application, account data to share capital account, application money, share application money transfer to share capital. Okay, so how much is actually the company has decided to issue only 50,000 shares. So 50 into 4, 5 fours are 20, 2 lakhs. Okay, next you have share application account data to share allotment account. Okay, everywhere you can add equity is for equity. Okay, excess amount adjusted in allotment. Excess money received is going to be excess amount received is going to be adjusted. Right? How much is that now? 15,000 was the excess, right? Into 4. That comes to 60,000. Now, the next journal entry. What's the next journal entry? What is your share allotment due? The share allotment due, share allotment account data to all equity. Okay, equity share capital being allotment money, share allotment money due. So how much is that? 50,000 into 4. 2 lakhs is actually due on your allotment. Right? How much is going to the bank? Bank account data to share allotment account. So how much is actually here? 2 lakhs. But then you've already received in excess 60,000, right? You're going to adjust the balance only 1 lakh 40,000 is going to go. Fine. So, okay. So what is the amount you're going to enter here? You're going to enter you're going to enter 1 lakh 40,000. 1 lakh 40,000. Right. So being share allotment money received. Okay, now next entry. What is the next entry? I want to show you the full screen. That's why I made it small. Now next you have your share first and final call. How much are you receiving share first and final call? Share first and final call. How much is that? Data to share capital. Okay. So how much is that? 2 rupees you're going to get for 50,000. So 1 lakh. Okay, being first and final call due. Right. Now next is what? The money is going to go into the bank. The company is called for it, so they're depositing the money. So how much will go into the bank? The same amount will go to the bank. 1 lakh. Shares, first and final call. Everywhere you add equity. Okay. Being first call money, first and final call amount deposited in the bank. So I hope you understood this problem. Alright. Now shall we go to the next problem? We go to the exercise problem. Right. Now what is the exercise problem state? Now let me expand the problem so that you can view it. Alright. Okay. Now your exercise 4, Gaja Limited issued 40,000 equity shares of 10 each to the public. Okay. 2 on application, 5 on allotment, 3 on first and final. 2 rupees 10 is the face value. Okay, that is the face value. You are going to get 2 on application. You're going to get 5 on allotment. You're going to get 3 on first and final call. Okay, first and final call. So that comes to 10 rupees. They say that you've got received your application for 50,000 applications you have received, but the company is going to issue only 40,000 shares. This is how much? 10,000. And what they have decided, they're going to issue it on pro rata basis. So this 10,000 is going to be adjusted in allotment. Fine, excess is going to be adjusted in. So to begin with, Gaja, journals. Remember you're still in journals. Next we'll be going to ledger. Okay, journals in the books of. Once you get accustomed or used to journals, then we'll be going to ledger and balance sheet of company accounts. So Gaja Limited. Okay. So what's your first journal entry? Bank account data. To share application. So towards application, how much do you get? How much did you get on application? 50,000 you got. And what is the thing you got? 2 rupees you got. So totally you got 1 lakh. 1 lakh. You can write your rupees in common. You can write in rupees in either you can write here or you can write this. Yeah. Okay. So being share application amount received. Share application amount. Let's say due to lack of space, I'm just writing in short form. Okay, then what is the next journal entry? Let me just pull up this screen. Okay. So next you are going to have share application account data to share capital. Okay. Being share application amount transferred to capital. Share capital. How much is supposed to go? 30,000, right? 30,000 into 2. So, not 30,000, actually 40,000, right? 40,000 into 2. 40,000 shares into 2. 80,000 was supposed to go. Good. Yeah. So, 80,000. Actual amount is 80,000. Is the person. Okay, 80,000. So, you're going to adjust the balance amount, share application account, data, to share allotment. So that comes to 20,000. excess amount transferred and adjusted. Okay. Now, next is what allotment amount is due. Share allotment account the to share capital account. How much is due here? 5 rupees I think you're going to be collecting, right? 5 rupees on allotment into 40. 5 fours are 20. 2 lakhs you're going to get. 2 lakhs. Right. Okay. Now next journal we share allotment account to share capital. So we share allotment amount due. Share allotment amount due. Next bank account return to share allotment. We share allotment amount received. How much is that? 2 lakhs minus 20,000. That comes to 1,80,000. So share allotment. Next shares first and final call account to share capital account. Meaning first and final call amount due. First and final call amount due. So how much is that? 40,000 into what is the amount due? 3 rupees, right? These are 12, 1,20,000. 1,20,000. Next, okay, last journal entry. So next you have bank account data. To always be written away from the first alphabet when you're writing two. Okay, bank account data to share first and final call. In first and final call, share first and final call amount received. What are you going to receive here? 1 lakh. Right, children? So I hope you understood this problem. And next I'll be continuing with illustration 5 and exercise 5. Where also you'll be getting learning pro rata allotment, where you will be having money adjusted with allotment as well as there is going to be. Okay, children. See you in the next class. I hope you understood. If you have any doubt, you can always call me. Thank you.